watching News 8.
CPA Dave Young is back with us. Dave, good morning.
Hey, it's great to be here.
We're talking about cryptocurrency tax laws. What is the IRS doing to tax cryptocurrency transactions?
Well, the IRS is taking a keen eye on it. They have a very big interest if you have cryptocurrency. As a matter of fact, on the front page of your Form 1040 in 2020, the IRS is specifically asking at any time in 2020, did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency? The fact of the matter is, if you have virtual currency, you likely need to report it, and there's some exchanges are actually going to be sending the IRS a form and sending you a form 1099-K saying, hey, these are the transactions that you had.
All right, let's dive in a little deeper on the reporting process. How do we go about that?
Okay, well, it's going to come into a couple of different buckets. The IRS is going to treat it just as if you're basically selling a capital asset like a stock. So if you, say, bought a cryptocurrency and you held it for more than a year, you're going to report it as a long-term capital gain. So your tax rate could be as low as 0% or up to 20% depending on your tax bracket. But what often can happen too, if it's less than a year, it's going to be a short-term capital gain. So it's really important for people to realize you can trigger this by selling your crypto for cash. So you had crypto, you converted it to fiat currency, cash, that's going to be a taxable event. You exchanged it from one cryptocurrency to another taxable event. Or what we see a lot is people will take their cryptocurrency and buy something. You took your crypto and you bought a good or service, well, you've just triggered a taxable event. So those three things could trigger you having to file short-term or short or long-term capital gains. So that's something be very careful, because in the background, the IRS is getting this report, and they're not going to look too kindly on you if you did not report this transaction on your tax.
For sure, they want a piece of it, we know. What about additional crypto-related activities that you should be thinking about reporting?
Right. So a lot of folks are getting into mining. So mining is going to have possibly two transactions. A, the income you receive from mining the cryptocurrency, that's going to be income. As a sidebar note, any of the expenses that you have related to mining will be deductible, but then when you sell that cryptocurrency after you mine it, we're back to triggering a capital gain, short-term or long-term. Also, what you see often is businesses are accepting crypto as a form of payment. So it's no different than if someone pays you on a credit card or cash. It's income, so you need to report that. Sometimes your currency will hit a hard fork, so that if you're into crypto, you're going to know what a hard fork is. And airdrop is kind of like, geez, a free giveaway or winning the lottery. So you might get that, or even getting crypto awards. Those are just some examples of, hey, other transactions where you need to report that. The bottom line is the IRS is taking a very hard look. So if you have crypto, you want to make sure you're reporting it, and look at your 1040. Page 1, there should be no excuse for missing this. The IRS put it right there in plain sight. You got to make sure you're reporting your cryptocurrency transactions, or you will have a significant problem with the IRS.
All right, Dave, thank you. We'll leave it there. If you missed any of this conversation, we'll share it online as well. Look for it at rochesterfirst.com.